Hello, traders. Gary Wagner here. Approximately 8 a.m. in Honolulu, 2 o'clock in New York. It is Wednesday, the 30th day of May, and this is the daily report for gold and silver. We have a nice upside move today in the precious metals markets, with gold currently trading up $13 to $14 higher. And as you can see, our cash price currently is 1568.26. When we look at COMEX June, that's 1557.80. As I said, up about $13 to $14 higher. Low was 1530.10, high 1570.70. Silver also showing nice gains, up almost a full percent today, up about 25 to 27 cents higher. And as you can see, current print 28.10. We did issue a buy recommendation and a buy trigger this morning. We'll talk about that and a couple of other strategies to work with in the precious metals markets. You know, the dramatic rise we have seen in the US dollar has been a direct result of a weakening euro dollar, and that is a direct result from the breakdown in terms of austerity measures and budgetary reforms needed in Greece, whether or not they're going to continue to be in the European Union. Spain now enters the picture. Portugal is having difficulties, as well as Italy. However, when we look at the dollar index, it is a basket of currencies against the US dollar. Look at the dollar when it is simply paired with the euro. Just this year, you can see right at the end of last year, beginning of this year, it hit this low, rallied a little bit up to about, call it 135, and after trading sideways for a few months, you can see that since May of this year, it has just been in a downward spiral. When we convert this to a daily chart, you can really see the kind of damage that has been inflicted on the actual euro dollar. Look at this dramatic move today. It's simply a very, very long candle, opens at the high, currently trading near the lows. Now, where could the euro go? My personal sentiment is that I believe it has a very, very substantial chance of actually going back to parity with the US dollar. Let's look at a couple of technical marks. I'm going to line this up as straight as I can. Obviously, I am fixing this series of lows here and simply drawing a line over. You can see that we get a matching low here, that double bottom. The market then moves up to about 135, $1.35 per euro. But you can see that we had a dramatic fall, really began in May under severe pressure. Right now, breaking through that support area here. And traders, when we convert our daily to a weekly and create our Henkin Ashi, the Japanese moving average charts, you can really see how dramatic this price decline has been. Absolutely under incredible pressure, currently trading on the lows. We are going to new highs as we chart the dollar index. This is a continuous contract, 432 minutes in length. Very, very strong trend, as you can see. As we talked about yesterday, pretty much a straight line up, a couple of very, very small corrections, but nonetheless, a very, very strong move up. Where could this dollar find some resistance? When we take a look at the big picture, but we can see a couple of technical levels. As you can see, we've clearly broken above any kind of resistance we might have gotten from this particular set of price highs that occurred at the end of last year. So we then need to go really back in history to find other target points in which the market actually found some resistance. As you can see, 84 and just above 86. So I believe the potential upside for the dollar is still very strong. Traders, the market is still trading substantially higher, up about $10 right now. And We are looking at a daily chart, but of importance with this daily chart are two factors that I want to kind of pay attention to. The first is when we draw our very long support line based on a series of lows. This is close, right in here. There can be no doubt, no question that we broke through that very, very important support level. But there's also something else we need to consider when looking at this. At the same time, the marketplace has had a series of lows. In fact, it's had a series of lows that have happened on more than one occurrence. The first was this intraday low after falling off of that high 1920. Retested our secondary bottom. And as I talked about for the last week, I believe we are forming a base in this area. And not only that, it appears as though the critical level of 1520, which are these sets of lows here, have in fact held and are holding. That to me warrants some serious attention. Let me go ahead and blow that up. As you can see, we had a pretty strong series of lows. They are all within the same range. They're not exact, but you can see these two lows right in here, and you can see this clustering of activity in which the market attempted to really break and make new lows. You can see these long tails here, and they are falling underneath this target area, but you can see significantly that market has held. When we convert this chart back to our straight candlestick chart, you can also see we've got a nice solid update. It's hammer-esque, and when I say that, you've got a long tail and a small body at the top. But I personally believe that this could be a pivotal point in terms of gold prices and this long, protracted correction we have been experiencing. Traders, at the beginning of this report, I mentioned that I'll be talking about a different type of strategy to work with the precious metals markets in this economic climate. When we talk about gold prices, of course, we're always talking about it as it converts to a US dollar. On the Forex market, you can trade gold as a currency pair. So you can trade it against the euro, you can trade it against the British pound, you can trade it against the US dollar. For those that have the capability to trade those particular spreads, my recommendation is to go long the gold spread versus the euro dollar spread. And that's this upper chart here. It obviously has been reacting differently than a dollar gold. And I think that what we will witness is going to be a continuation of a weakening euro dollar. And as I said, I would not be surprised to actually see it go into parity. Now, traders, that strategy will work as long as you do not reside in the United States. In the United States, we're unable to trade gold on the Forex exchange. So there is an alternative strategy for us who live in the mainland. You can gain the same effect, the net effect of trading the euro gold spread by trading gold and the euro dollar versus the US dollar at the same time. And here's what I mean. With the euro dollar itself, the contract size is 100,000 euros to 100,000 US dollars. And each contract of gold contains 100 ounces, which now has a value of approximately 160,000. So that for each currency contract that you put on, you're going to control $100,000 of euros and US dollars. The basic formula would be for every 2 contracts that you're long gold, which is roughly 300K in terms of value, what you're going to want to do is be short 3 contracts of euros. And traders, when you put the dollar gold spread chart next to the euro dollar gold spread, you can really see a fairly significant difference when you compare them. The most important thing is if we look at the slope of this correction, we have had a rather harsh correction. We've had very, very volatile pricing. But in the euro, after it made its high, the low was not nearly as significant, And you can see it's been trading in a much more defined range, 1,200 euros on the low, 1,350. So you've got a spread of about $150, euro dollars, in between the new price high and the current lows that we've hit. When we compare that to the US dollar gold spread, you have a high of 1920, you have a low of 1520, so you've got about a $400 move in the dollar and only a $150 euro dollar loss in terms of the euro gold spread. It is a significant difference, and that's why I think it might benefit traders to at least consider this strategy. Now, the reason this strategy appeals to me is that we have made a paradigm shift in terms of safe haven investments from gold to the US dollar. Secondly, as long as we can acknowledge that we are forming a base with the lows at around 1520, and if that area holds, we could, in fact, be looking at the end of this incredibly long and protracted correction, which, when you consider the time span itself from when we hit our high to these series of lows, including our current low, it has been a multi-month correction. Traders, this is our current silver chart, very, very short term, 2 hours per bar, Heikin Ashi format. But here's what I am noticing that I think has some significance. Here's our high, 37.50, secondary top. As the market comes down, it has basically the classic telltale signs. And what are those signs? Well, it is always a lower low than your prior low, and then a lower high, a lower low, a lower high, lower low. Here you don't get that. But as you can see, you start getting a series of lower lows and lower highs. Now, look at the marketplace from, call it the 16th of May, right in here. And what we're getting is not a series of lower lows. In fact, these last two lows have been higher lows. What about the highs? Well, we absolutely have resistance right at 28.50, just above it, right in here. So that's going to be the target. If this market begins to move back up, that's where I will expect to find a little bit of resistance. But it is, in all essence, a reversal in that what we are looking at now is a series of higher lows and call them equal highs. And secondly, in terms of the short-term charts, you can see we have absolutely gone green. Right now, we are currently just forming a new candle, and that could end up green or red. But you can see these last 3 2-hour periods have been pretty strong in terms of a uptrend and uptick. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.